Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday, May the 7th, 2013. We'll be looking at gold today, silver, as well as a few other various charts, Toronto Stock Exchange, and a couple of U.S. markets as well. This is a really important chart that I've been talking about it for a while here. You've been in a massive downtrend. I know that's because it's a lower series of lows, lower series of highs. Whenever you're in that condition, you're in a downtrend. But there's something else going on here. You also have broken out and completely destroyed the bullish uptrend you had and took out massive support levels. This was a massive support area over here where you had support bounced off of it, and again, you come up here and you close below it and bounce back above it and you fail here. Same could have been drawn this way where you draw it like we did here on the little wedge formation here, and then you had to close below that. Once you close below that point there, you're indicating that you've broken that trend, you're starting to fall apart. You pull back down here, you come up here, test it again. It's quite common. Find resistance. What was previously support now acting as resistance. You start to sell off here in a massive big way. This is a very, very large move here, and it's because the structure has broken. Whenever the uptrend structure breaks down, you're getting a very, very bearish condition. People have got a lot of stop loss limits that are set in place based on certain conditions being maintained. When those conditions fail, then they start to just sell drastically. So this is what I believe we're seeing here happen. A massive move by most sellers who needed to exit for reasons, they have their own. They decided they wanted to take some liquidate some gold, and you had other people who were just forced out by that liquidation, and so that's important to note. Also, again, you'll point out that the ultimate oscillator up here at the 70 line, whenever you get above that, you start to get into overbought conditions, and you see that all the time when we show you charts. However, there's also cases where you will not hit the 70 line. You will peak at the 60 line, this little faint line right here. Whenever you do that, you typically find yourself in a nice bearish market, and that's typical condition of a bearish market. You'll peak early before getting up above 79. You'll peak below that. So that's important to note as well, because that's what we're seeing on this chart, a bear market. Again, you'll notice whenever you have a bear market, you'll have this red line here. This 50-day moving average will cross below the 200-day moving average, like we saw way back here. And then you'll start to find resistance at that 50-day moving average, which pulls away from it. Comes up to it and pulls away from it. We come up to it, get a little bit closer, and we just kind of go sideways here. Again, this is a condition of a bear market. The main thing I want to draw your attention to about the gold chart we talked about yesterday, we said that you should start watching that. We updated the chart on the website for different reasons, gold, silver, and Toronto Stock Exchange, because these are all showing us signs that they're starting to roll over. We saw this a couple days ago, and then again we saw this little formation here, the doji formation showing indecision at that point. So we knew it was fixing to break, and we thought we were going to be breaking to the downside because the overall trend is down. So we had these marks here and as well as here. And so then today we got confirmation we were actually selling off here, and that's important, and I'll show you why in a second. But you'll see that the close here is lower than you've seen before here. This is breaking down very simply. And we also have talked about this back when it was forming. You had this little up rising wedge formation. They typically break out of those to the downside at about 70% once they're formed. So it's important that you take into account everything we've shown you here. All these signs are telling you the exact same thing. There's nothing odd about this chart in any way, shape, or form. I know there's some people out telling you this is a great buying opportunity back when this was happening. We told you that it wasn't. It was in fact just a fake bull move here, or a fake out that was eventually going to turn around and wipe all this gain out, and you were going to actually end up duplicating this move here to the downside. We still see that coming. We'll show you one more detail right quick on this chart. If we scroll on down, you'll see, we look at the accumulation distribution time period, you will see that you have this little bull trap going on right there. You can always spot this. Sometimes you can spot them on the chart. It's the angle and the lack of momentum and lack of volatility. It's just that little angle is the only thing I can tell you about it that gives it away. It's a fake little move before you turn around and roll over. We saw this before back here. The angle was right here, and you saw this for a while. No normal activity, just little small moves up in this little angle, and then you roll over. Just the same things that happened that caused your massive breakdown in the past are happening again, and you're seeing this breakdown again. So you don't trade gold, you say. Okay, fine, then it doesn't matter to you, right? Wrong. Whenever you look at the gold chart, you'll see that you start to break down early April. You saw the breakdown here, and then just shy of the middle of April, probably about April the 12th maybe, you started to break down here again. So you had this breakdown here, and you come up here and you peak again at the middle of roughly the middle of April and start making big moves lower. The main thing I want to draw your attention to here is the dates. So look at the April start, and you see the breakdown. You see before the middle of April, you see the breakdown again. So let's look at some other charts. Before we do, note again, starting to break down here. We're going to take a quick little look here at the FTSE London Financial Times Index, and you can see that we were in this little uptrend going on for a little bit here, and then we come on here and we start to bounce off that 50-period moving average, and then we get up here and we just stop at the start of April 1st, if you will. We stopped. We made a series of lower highs and started to go lower, exact same time that gold was selling off. Also, you'll notice before the 15th, just before the same time period, just before the middle of the month, same time period the gold was peaking, you also saw the FTSE was peaking. So again, this chart was completely altered by the activity that you find in gold, where gold was breaking its structural formation and started to move lower. You saw the FTSE do the exact same thing. We're going to look at some other charts, but the main thing I want to bring your attention to is that correspondence there, where we have the exact move that you see happening in gold, same time period you see the FTSE breaking down right here. Again, it should be noted that if the gold chart we were showing is accurate, and we're telling you that you're seeing this breaking down now with gold, then in fact you should be expecting this overbought condition here at the 70 line there. It would make a lot of sense that you will be in fact peaking and you'd be looking for some kind of a sell signal to develop here. Quick glance here at the French CAC 40 index, the same basic overall story, is uptrend going on here. And then we get this little pullback to 50-period moving average, where you start looking for your entry opportunities on the long side. You get this move up here, and then gold reverses on April 1st, and you see we go with it on the French CAC 40 index, and then bounce up here again, and then we get taken down with gold with again. And then gold starts to make its little sideways moving activity, or fake bull flag there, or ends up giving me a false bullish setup there, and it's going to just pull a lot of people in on the long side and then end up breaking down again. And if we're right and gold is in fact peaking, we should start to see developed sell signals at the same time period on these other charts. And again, you can see today's activity, shooting star. Quick little glance here at the NASDAQ. We can talk about this for all week and past the week as well. So you can see here you had the sell signal forming on the start of April, and then you started to sell off, taking out previous lows here. You made a move again up here, and then before the middle of the month of April, when gold broke down, and you saw the same thing happen here. Now we're seeing gold start to show signs of breaking down again, and now you'll see that we have a hanging man candlestick formation, another bearish signal. It's much like this one right here. It's just a hammer candlestick formation at the top of a pattern rather than the bottom. If you have one set up at the bottom, it means calls for a bounce to the upside. If you have one set up at the top, it means it's a sell signal for it to break down. Looking now at the Russell 2000 Small Cap Index, the start of April. Here again, a breakdown happens. Then again, you can see the middle of April, early before that, you started to get sell signs in line with the gold, the peak point, and you see again a breakdown here. Am I trying to say that gold is the cause of all these breakdowns? No, I'm not trying to do that. I'm just trying to point out that massive moves in the markets, when we have structural problems like that do bleed over. And so you can see that with gold starting to fail and start to go lower, it's going to again remove confidence from the market. That's going to again cause people to say, wait a minute, what am I doing buying up here over the 70 line on the ultimate oscillator way up there? Gaps below me. All these things are going to come into question there. Right now, no one cares because price is going up, and that just is all that a lot of people think about. But in reality, this market is breaking down, as gold is proving to you, and it's important that you notice that, and sooner rather than later, because sooner or later this market will catch up to that reality, and then it will have to play a game of catch up and quickly mark the actual distance that gold is falling. You'll see all your stocks do the same thing. Remember, 2008 time period when we had the massive crash, gold and stocks fell equally. Last chart we're going to be looking at today will be silver, and this one again is telling you the exact same thing. You had a massive breakdown here, or massive move lower here, and then we just moved sideways along this little support line, little support zone, if you will. All we were doing here is draw this little trend line out here, and when we close below that line, we know that we will be breaking down. As long as you stay within this range, you are just moving sideways, but you haven't chosen a direction. Now we expect whenever you're doing that, the previous trend, this trend over here, will be continued. Therefore, this is the first down leg, and you expect that to happen over here, right? Like we're talking about with gold, you have this big move, and we'll talk about that in a second. But anyway, the main thing here, I want to point your attention here, you can get a little early warning signs of telling you which direction it's going to break, and that can be done by piercing, which is where price activity sells off below that line and comes back up before the close and closes back up in that range. So all you've done is just had intraday activity that pierced that trend line right here, right, the support line. You had that happen here, you had that happen here, you had that happen here, and then you started to close below that. Once you close below it, it's broken. At that point, you start to see the slide. You might test it again to see if you find the previous support now acting as resistance, and that's typically the case, and then you'll turn around and fail from that point and go lower. That's important because what you're seeing right here, this uptrend line right here, and then what you have in today, you have a lower pierce of that. It's very, very important. Once you're breaking down, you're starting to see piercing. That tells you that this is fixing to break to the downside, and you're going to see this continuation. Like we saw back here, you had this big move here, then sideways, then break down. You continue this move out this side. So now you've got this big move down here. You're going to see that down there. Okay, gold, same way. All that tells you the same thing with stocks. Do not be a buyer of this market. Again, note the ultimate oscillator. Bearish market, yeah, I'm pretty easy to say that. Okay, everything above the 70 line is overbought, typically, whenever you have this oscillating scenario. And then whenever you're not able to even get to the 70 line, you're peaking at the 60 line. It's because momentum is that weak because you are, in fact, in a bear market. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. Also, I didn't get the Toronto Stock Exchange TSX chart that I was going to look at, but I did update it on the website. This video is just too long to be doing it. So it's right here on the market chart. You can simply go there and check it out. I've already marked the chart with my annotations, as well as there's several others in there as well. Okay. God bless. Take care. See you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.